Welcome to another S&P 500 analysis. The S&P 500 and the market continued to move higher last week. The small cap had one of the largest single-day gains since last November. So is the recent mega cap tech stock rally finally starting to rub off to the small cap? Is the market relieved because the debt ceiling bill was passed? Or is it the market think the Fed will not raise high in the next FOMC meeting because the employment rate had increased to 3.7%? But what about those huge non-farm payroll numbers that we got last Friday, 339,000 new jobs created in May? Could that be too good for the Fed to pause? These and a million other reasons could have caused the market to move up last week, but at the end of the day, what really matters is the price. In this video, we'll look at the price action of the S&P 500 and the other major market indexes, the market sentiment to see how the market participants are feeling about the market, and see how strong the market is by looking at the market internals. We'll also look at the 10-year yield, the US dollar, oil, silver, and gold, and see how they are doing. Finally, we'll take a look at these FAANG stocks, NVDA, Tesla, and Apple. Stay tuned. Looking at this watch list, the Russell 2000 was the top performer last week, mainly due to its gain on Friday. It gained 3.56%. So for the week, it gained 3.26%. But guess who's the worst performer? The NASDAQ 100. It only gained 1.74% for the week. And for the year to date, all the indexes are green. And you see the NASDAQ 100 is still holding to close to a 33% increase, and the composite holding at 26.5%. The S&P 500 year to date is holding 11.5%. And the Dow Jones Industrial is only holding a 1.86%, and Russell 2000 almost 4%, while the transportation about 5.5%. And look at this weekly chart of the S&P 500. We can see the range is somewhere around 125 points. It gained 77 points of 1.8% for the week, and it closed above the 4,200 and away from the 4,200 at 4,282.37. In addition to that, also closed above the 10 and the 40-week moving average. And last but not least, it filled this August gap here. Looking at the sentiment chart here, on Friday, the VIX was down at 14.6, and the put-call ratio is at 0.6951. The VIX haven't been this low since February 19, 2020, and that was at the pre-pandemic high, and the VIX on that day was 14.38. and with the put-call ratio sitting at 0.6035. Definitely, market participants have turned complacent and they went risk on. And the up-down volume ratio did expand to 4.7 to 1 in favor of the up volume on Friday. Not really impressive for a day with the S&P 500 gain almost 1.5%. One would like to see somewhere around 7, 8, or even 10, or greater than 10. But the rally was pretty broad-based because on the daily advance decline, there were 2,091 more advancing stock than declining stock. So that is pretty good in terms of the market participation. We also saw on Friday 78 more stock make new 52-week high versus 52-week low. We saw 92 stock make new 52-week high and only 14 make new 52-week low. So that is also a little bit of a positive on Friday's rally. But the negative divergence between the cumulative AD line and the S&P 500 remain, and we're still waiting for resolution. Now, one of the possible upside resolution is for the AD line to come up and take out this high here, while the S&P 500 also move above this pivot high. So that would be a resolution to the upside. But if we are looking for a resolution for a downside, then the S&P 500 basically have to come down. And the NASDAQ 100 continued to make new 52-week high. It gained 0.75% on Friday, with 3.7 to 1 in favor of the up volume on the up-down volume ratio, and also 2,218 more advancing stock than declining stocks. In addition to that, we also saw 75 more 52-week high than 52-week low. There were 129 stock make new 52-week high, versus 54 stock make new 52-week low. But again, the negative divergence between the cumulative AD line and the NASDAQ 100 remain. In matter of fact, it is getting larger. Now, how soon we will see this resolution? Well, looking back here, we could see this divergence could be with us for quite a while before we get the market to resolve that. So we could see a little bit more melt up on the NASDAQ 100 while the cumulative AD line continue to hover near these low here before we get a some sort of a resolution and have the NASDAQ 100 make a major correction. But we'll see. And looking at the 10-year yield, it's still hovering around this 3.75%. I'm still expected to eventually get up to this 4%. But if the Fed decide to pause for the coming FOMC meeting, we could see it just kind of hover near this 3.75 area. And the US dollar is still holding above this 103 level. This too, I expect it eventually will come back up to this 106, 107 level. But in the near term, I do expect the dollar just kind of chopping around near this 103, 104 area until after the FOMC meeting. And oil got a couple days of bounce last week, on Thursday and Friday. We could see it come back up to this 75 level and possibly get back up to this 83 level here if we continue to see the dollar to remain kind of soft or even go down a bit. In addition, the latest news is that the Saudi Arabia have decided to cut production by another 1 million barrels a day. I believe that's the latest news from the OPEC Plus meeting this weekend. So that will also help possibly push the oil price to go back up. Silver moved back into this consolidation area last week, but I'm still looking for this to come back down, possibly to this trend line. This would be a good area to look for some sort of trade setup to possibly have a swing trade coming back up to this 25, 26 level. Gold also got a nice bounce last week, and if the dollar continue to stay strong, then I expect gold to pull back into this area here and possibly remain in this area until the dollar start weakening. If the dollar start to weakening, then I'd be looking for a potential swing trade back up to test this high here somewhere around the 2068. Now let's take a look at the indexes on the daily chart here. Looking at the S&P 500, you see that it broke above the 4200 and stay above it. It also tagged the upper range of last week's expected move. And it also filled the August gap here. So this coming week, we'll be looking at the possibility on the upside, targeting this prior high here, and also come up to the weekly expected move upper range. That will be between 4330.80 and 4367.67. Now this prior high here is sitting near at 4325.28, which is also confluence with the upper range of the expected move. And on the downside, we'd be targeting the lower range of the weekly expected move, which is between 4220 and 4233.90. And see, would it also come down to this 4195, 4200 area if it breaks below the lower range of the expected move. The NASDAQ 100 rallied back up to the upper range of last week's expected move. The price also exceeded this 127 major move of this bull flag. And if the upside continue, we expect this to get filled, this gap, and come up to the upper range of the weekly expected move, which is in confluence with this upper gap level here. And the upper range is between 14,802 and 14,900. Now, on the downside, then we'll expect it to come down to this lower range of the expected move, which will be somewhere between 14,230 and 14,291.30. And for the Russell 2000, we're looking for the gap down here, 1730, to get filled. Instead, on Friday, it experienced one of the biggest single day gains since last November, and it came up and filled this gap at 1830. So the next week on the upside scenario, we're basically watching the price to see would it continue to move up toward this 1925 level. Then on the downside, it's come back down and fill this gap, the Friday's gap, somewhere down here at 1773, and work toward the retracement back down to this 1700 area. And for the Dow Jones Transportation, it broke above this trend line here. So right now, if it could hold this break, then look for a move back up toward this potential resistance up here at at 14,637. If it is unable to hold this trend line breakout, then look for a move back down toward these potential support down here near the 13,460. And the Dow Jones Industrial also had a strong Friday. It moved up, and right now it seems like it's trying to get up to this trend line here, or possibly to this resistance up here near the 34,277 or 34,300 area. So if it continue to move up, those are the levels that I'll be watching for potential resistance. But if it come down, then look for this gap to get filled and watch it to work itself back down toward this potential support level at 32,567. And for the New York Stock Exchange Composite, just watch this trend line near the 15,440 for potential resistance, down here at 14,880 for potential near-term support. Now let's take a look at the index ETF, starting with the Diamond, the ETF for the Dow Jones Industrial. I'm going to be watching for a break of this trend line here and possibly get above this composite point of control and then move toward the upper range of the weekly expected move, which is between 342.20 and 343.60. Now, if it pulls back, then we'll look for this lower range of the expected move between 334 and 332.80 as the initial target, and then the next possible target is the trend line down here, somewhere near the 330. And for the SPY, we are looking for a possible upside move to the upper range of the expected move, which is between 432.90 and 434.30. Now, for the downside scenario, we are looking for it to push back down to this lower range of the expected move, which is between 422.90 and 421.30. And if it doesn't hold the 420 level, then we expect it to come down to this point of control here near 411.72. And the QQQ, the ETF for the NASDAQ 100, the upside scenario is to move up, fill this gap here, and move toward the upper range of the expected move, which is between 361 and 363.30. Its downside scenario is to come down to this 347 level, which is also in confluence with the lower range of the expected move between 348.30 and 347. If it failed to hold this 347, then watch for this gap down here at 337. That could be in play. And the IWM, the ETF for the Russell 2000, the upside scenario is to move up to this upper range of the expected move between 185.90 and 186.80. And the downside scenario is to come down to this 178.88 level and the lower range of the expected move between 178.1 and 177, and then possibly come down and fill this gap here near the 176.24. Now let's take a look at NVDA. You see NVDA came up and made a new all-time high up here at 419.39. It is in the consolidation area right now between this 405.70 and 335.83. So if it breaks above the 405.70 next week, then look for a move up to the upper range between 410.90 and 419 and possibly put in a new all-time high. If it confined in this consolidation zone, then look for the lower range between 372.50 and 375.60 to get tagged. And for Tesla, if Tesla broke to this trend line here and testing this prior high, so if it could move about this prior high this coming week, then look for the upper range between 225.30 and 230.80 as a potential target here. If it pulls back, then look for a back test of the trend line and the lower range between 200.60 and 202.60. If it failed to stay above the 200 level, then look for a pullback toward the lower trend line here. And for Apple, it's only about 2 points away from its all-time high. And if it makes a new all-time high, then look for a move toward the upper range of the expected move, which is between 186.30 and 188.60. The downside scenario is for it to come down and fill the gap and tag the lower range of the expected move, which is between 174.30 and 175.60. In summary, the market participants are getting complacent and are quite bullish right now. Although we saw the market bottom out throughout the sector on Friday, but the negative divergence between the cumulative AD line and the indexes are still unresolved. We could continue to see more upside, but at this level, and with the rotation away from the mega cap tech stocks, it doesn't take much to spook the market into a sell-off. So continue to remain cautious and manage your risk. If you find the content to be useful and informative, be sure to give it a like by smashing the thumbs up and leave a comment to help promote this video on YouTube. If you are new to this channel and would like to continue to watch these videos from me, then subscribe to this channel by clicking the subscribe. Finally, don't forget to visit my Substack page for additional contents at smtraderca.substack.com. You could also find this link in the description below. Thank you for watching and stay safe.